Hey Alex, hey Mia. I want to thank you guys for coming in today to discuss your financial plan with me. I know you guys are super busy, so we'll try to make this somewhat quick for you guys. As we discussed a few weeks ago, this whole process can be pretty complex and confusing at times. So I think it's great that we're really taking the time here today to sit down and really discuss the next best steps for you to take, not only for in the short term, but the long term as well. And I want to thank you guys for compiling all of your personal and financial information for me. It was really thorough, really detailed, and I can tell you it made my life a lot easier. It really helped with my calculations so that it can be as accurate as possible for you guys. And I want to thank you guys too, a couple weeks ago for signing that letter of engagement. Really, I think it's great that we're establishing each other's expectations, and it helps me clearly understand what you're expecting of me so that I can perform my job to the best of my ability for you guys. And yeah, the last time we met, I promised that I'd analyze that information, review it, and then make some recommendations to help you achieve your personal and financial goals, not only in the short term, but the long term as well. So the plan here today is to really go over this plan with you in some detail, and as well as recommendations that could prove to be beneficial to you and your family. But before we get started, do you guys have any new questions for me, any concerns, maybe some additional information that's come up in the past couple of weeks? No? Okay. All right, cool. So before we start, I really wanted to just let you know, give you a warning that this plan right here, it really isn't set in stone. There's things in our lives that happen unexpectedly, and it could drastically change what we have in the plan here today. So what we'll do is continue to monitor this plan and evaluate and to see if we need to implement any new changes as time goes on. So we'll just evaluate. Just know that this plan isn't set in stone, and we'll continue to update it when we need to. So the first thing we'll discuss really is 529 plans. So you had asked me to figure out the advantages of using a 529 plan to fund your future college expenses for your kids. You also want to know the maximum amount that you can contribute to a 529 plan and the potential gift tax effects of those contributions. So first of all, what is a 529 plan? It's pretty much a tax advantage savings account, meaning that everything you contribute and as it grows, everything that you withdraw in the future is tax-free as long as those funds are used for qualified education expenses. And that term can be pretty tricky at times, but that just means those withdrawn funds can be used to pay for tuition, fees, room and board, books, and some other education-related expenses at most 2 or 4 years universities. And in this past year, in 2018, the IRS now allows that the funds in 529 plans can actually be used for certain qualified schools from kindergarten to high school. So we'll have to determine if your kids' current schools apply. So you may be able to withdraw funds from a 529 plan to pay for that, pay for your kids' current school. And also those funds, if they're not used for the qualified education expenses, they could get hit with some penalties. So that's something we'll have to be aware of going forward. And one other thing is that these contributions, the downside is that they aren't tax deductible on your tax return, but for your federal return. But some states do allow some state tax deduction credits. So we'll have to determine state by state, and figure out if your state applies. And there's 2 main 529 plans. One is the prepaid tuition plan, and the other is the savings plan. And in your situation, the prepaid tuition plan is definitely the more relevant plan in your scenario because it allows you to pay for your kids' tuition and fees, whereas the savings plan is similar to an individual retirement account. And then you asked me to determine the maximum amount that can be contributed. So first of all, I want to say there isn't a limit to how many 529 plans you can actually set up. So if you wanted to, you could set up one per kid if you wanted to. And in terms of the max amount you can contribute, it's kind of a tricky question because there's no set limit. The IRS pretty much says that the amount can't exceed the amount necessary to fund your kids' future education. So perfect example is, say you expect one of your kids to go to college and you expect to pay $250,000. Essentially, the amount in your 529 plan for that one specific kid can't be above that amount that you expect to pay. Yeah, and another bonus of it is that if any unused expenses can be rolled over to another family member if it's unused, and it's tax-free, not an issue. So that's another plus. Another great thing is that there's no income limit restrictions. So I know you guys you expect your salary to increase annually, so you don't have to worry about your adjusted gross income hitting a certain limit. Like for example, a Roth IRA, right? You can't contribute when your AGI is a certain limit, but this, you can make millions of dollars and have no issue contributing to a 529 plan. So that's one of the great things about it as well. And then gift tax effects. So in 2018, the annual gift tax exclusion amount is $15,000 per person. So since you guys are married filing jointly, it's $30 grand per person. However, for 529 plans, they actually allow you to contribute $75,000 in any given year to one specific person, and you're allowed to avoids the gift tax as long as you spread it out over a 5-year calendar period. Meaning, if say you contribute $75,000 one year and nothing for the next 5 years, then you don't have to worry about the gift tax effects. You won't have to file a gift tax return or pay any gift tax. But if you paid $75,000 in 1 year and the next year you give your kid $15,000, then you would have to file a gift tax return, and there would be potential gift tax effects. So yeah, it essentially 529 plan contributions essentially avoid the gift tax for each individual. So that's why I highly advise you to make 529 plan for each kid beneficiary, so that you can contribute pretty much $75,000 per kid if you wanted to in any given year without worrying about the gift tax. But that's something we'll definitely monitor, because if you decide to give that amount, or say decide to give that amount and then future gifts to those kids, we'll have to really discuss the 709 filing requirements, and that's something we'll get back to eventually. Another thing, so I wanted to discuss a quick alternative to a 529 plan, and those are called Coverdell Education Savings Account, or ESAs, which have been pretty popular with people in the past years, and they're very similar to the tax treatment of 529 plans. The major downside, though, is that the max you can contribute to each kid, in your case, per year is $2,000. No more. And it's not tax deductible. So that's the major downside. And I highly recommend sticking with the 529 plan. But it was just, I just wanted to bring up the alternative in case you wanted to explore that option. And if you want to pursue that further, let me know and I'll help you out with that. But I think 529 plans are the way to go. So another thing I wanted to go into with you guys is hiring a tax professional, because you guys have mentioned in the past that both you guys have pretty much kind of filed near the deadline and rushed or procrastinated in the past, and I really recommend hiring a tax professional to assist you with this, and I know a couple CPAs that could help you out with this. So if you need any recommendations, just let me know. But there's major advantages to it is that tax professionals will they're up to date with the tax law, so they may give you heads up for some deductions that you weren't aware about when you were doing your own tax returns on your own. But they're up to date with the tax law, and they'll be able to help you out and avoid potential penalties also for filing your returns. You had said you filed them late before, so they'll stay on time, and it'll help you avoid penalties and fines, whatever. So that's a major advantage. The disadvantage is that, yes, it will cost some money. But after implementing these recommendations from your financial plan, you should have some extra cash to spend. Hire a tax professional. I just definitely think the advantages far outweigh the negatives of hiring a tax professional. So I would definitely do that, but it's really up to you guys. And again, if you need any recommendations, just let me know. Any other questions for you guys? Any concerns? Nothing? Okay. Thank you guys so much.